Hello, everyone. This is Mark with Semantics Research with your daily market recap. So, we started today with Microsoft lowering their guidance, which initially spooked the market and had sellers piling in during the initial balance period. However, looking into the fourth quarter guidance of Microsoft, it appears that it was related to the moves in the foreign exchange markets with the weakening of other currencies while the dollar remains bid as there is a flight to safety. It appears that sellers failed to gain control under the previous day's low on the E-minis, and responsive buyers absorbed the sellers on the tape. We ended the day having a short covering rally, ticking all the way up without much pullback, and the ES ending up 100 handles higher at the end of the day. It appears that the VIX is continuing to contract, and it is likely that we continue seeing contraction for the foreseeable short-term future. We do have some jobs data tomorrow, which is not really a pivotal catalyst, so I do not expect any sort of significant moves in either direction. Next week, it is quite boring in terms of economic reports, and the only notable event is on Friday, where there is a CPI report, and then the FOMC the week after. I would not be surprised if we flirt with 4,200 or higher before possibly seeing longer time frame sellers step in, as there are important options levels in the upper end of the range. It appears that there is so much cash out there which is ready to buy equities, but people tend to get scared on the down moves, which we clearly saw this on the lower end of the range at 3,800 when everyone was peaking up their long positions and piling back in as we started rallying and people began chasing the move up and loading up. Crude had caught a bid today, recovering all its losses from the prior session, as it appears that the demand for energy remains strong and there is no demand destruction according to the gasoline demand data. With today's report of the U.S. crude oil inventory, there was a decline of 5.1 million barrels, and OPEC also agreed to move forward with this increased production with little effect on the price of oil, as it seems like that the Russian import ban from various Western countries and the supply chain issues continue aggravating the inflation situation. Refined products such as gasoline and diesel are soaring and continue to lead higher, making record highs. And this bid in the refined products is actually what is acting as a major catalyst for the price of crude remaining sticky to the upside, which does not necessarily help the Fed's fight against inflation. The European Union also approved another round of sanctions, which included a partial ban on Russian imports, which will actually cut about 90% of the EU's oil imports. It prohibits the deliveries from Russian ships, but currently has exemptions for the pipeline deliveries. Despite attempts to hurt the Russian war effort, it appears that Moscow has been finding new markets in Asia, such as India and China, and delivering twice as much oil since the beginning of the war. It appears that gold is calling BS on the Fed's hawkish talk, and the market is signaling that the Fed is losing credibility. It appears that Fed's Mester initially spooked the markets, particularly the ES in the morning session, shooting down hopes of a Fed pause in September. And the markets but actually the markets recovered their earlier losses and signaled that they believe that the Fed cannot go through with their claims of aggressiveness. Taking a look at the ADP National Employment Report, it appears that small businesses are hit the hardest from the rise in interest rates and inflation. In addition to macro surprises lately, the factory order growth has slowed to even more dramatically, surprising analyst estimates which expected growth to decelerate by 0.7%, but instead it was 0.3%. We must remember, though, that this data is delayed as it is April's data, which the May data is yet to be reported. However, it does not really paint a nice picture at the current moment with a slew of macro surprises that is currently looming. Although we have all these macro reports, do bear in mind that the key reports that are really important are actually the next two CPI numbers and the GDP number, which will likely give us a clearer picture overall. And that is about it for today's report. I thank you all for watching, and please do check out the link in the description for more updates on our Twitter and Substack.